Well, the market is on fire this morning. The bulls are in complete control of this market and the Nifty is well above 13,000. The one space that has found a new set of wings is the auto sector. So as we speak, M&M, Eicher, Maruti, Tata Motors are all your biggest Nifty gainers. And Motherson Sumi is one stock that has had a very, very strong run this month. The company has spelled out its growth roadmap with focus on driving up the company's return on capital. Vivek, Chaand, Sehgal, the chairman of Motherson Group, and Laksh, Vaaman, Sehgal, the vice chairman of the group, join us now to talk about that. Gentlemen, morning, and as always, thank you for being with us on CNBC TV 18. Mr. Sehgal, I want to start with you first. You've earmarked a very ambitious $36 billion target for 2025. That's more than a 3-time jump that we could see from the current $10 billion. I want to start by asking you how you plan to achieve that. Can you just, help us understand the broad growth drivers that could take you to this target?
Sure. First of all, good morning. Look, we've always been having our 5-year plans. They're ambitious. There's something exciting, gets all the people blood running in their veins. And we've been doing it from 1993. 5-year plans have been laid out in advance. We actually publish it in our annual report with the bottom line, of course. And 4 times out of 5, we have been able to beat what targets we have set. The last 5-year plan, we couldn't come because of COVID, but Motherson, we said no excuses. But in hindsight, it kind of looks it's for good, because whatever assets we were going to buy in Jan-Feb are today actually way cheaper than that. So maybe there's always good in some delay somewhere. These targets are not made really by you and me, really, Vaaman. It's made by the team itself, isn't it? Why don't you talk about that?
I think all our companies have worked bottoms up. There's a lot of room for us to expand in our products. We looked at markets where we are underpenetrated. We looked at customers where we are underrepresented. And we took kind of, some targets where we think we can grow in this 5-year period. And on top of that, we've also decided that there are 4 verticals which we want to go after in the non-automotive space. We're using the strengths that we have built in the automotive side. We can have some good growth opportunities as well, which we have seeded in this last few years. And we think it's possible. It's ambitious, but it's possible.
But also, I think our 5-year target was, always automotive. So for 35 years, we have done nothing but automotive. So this is the first time that we are actually delving into new ground.
That's right.
Well, I guess because Sonia asked the question to Mr. Sehgal, both of you are replying. I think we will make it more specific now. Okay.
That's why we say mother, son, father, son.
Okay. Got that. Okay, Laksh, I'm coming to you in a minute. Mr. Vivek Sehgal, while I take your point that you're moving away into also aerospace and logistics and health and medical technologies, wouldn't your investors worry that that's not your area of expertise? And therefore, initially, it may mean high capex, low margins, no?
Look, for a person who doesn't know, yes, you're right. But 2.5 years ago in our investor conference, we had already said to our investors that we are going to go into these 4-5 new fields. So I think my investors are very well informed. And I believe that they are in sync with what we are doing because of the simple reason Motherson's, we've got about 290 plus facilities all over the world now. So in these facilities, the core strengths are going to support these new verticals. So it's a very well thought out drive where we don't have to spend crazy money on building up new facilities and all that.
Okay, no, I was just wondering if there's a learning curve. But Laksh,
No, don't worry about it. Okay. There's no learning curve. Okay. We've already done it for 2.5 years.
Okay. Laksh, I wanted to ask you now, 5 years down the line for which you are drawing targets, how much will be the non-automotive business as a part of revenues and a part of EBITDA?
We think it will be about 25% of the business, somewhere around 9 billion. We don't guide on margins. We like to still think that we can maintain the 40% RoCE. Of course, 40% RoCE, return on capital employed, is a group target. So, when we build new greenfields, etc., they never start at that 40%. But over the 5-year period, we would like to see them to get to that point. And some are doing even better than that. Some of our companies have now hit 60%. Some of them, are, because of those green fields, are in the 20%. But on average, we should like to see them moving towards that 40% mark, which is again is a high number.
Okay, Laksh, why this move away from automotive? I mean, it's not that you're producing less of automotive, but incrementally you're going to produce more of something else. Why that? Is there a global peaking off of auto demand, or is it that other pastures are greener?
No, absolutely not. I think we are keeping our focus on automotive. 75% of our business will still remain. I think you have to understand that now with the size that we have reached, we're 21st largest auto comp player in the world. And we believe to go and grow exponentially, we will have to look at different products, different fields to maintain this pace of growth that we have had. Because you have to understand, in the automotive space, we are a 100% OEM supplier. And after a point, customers would not like us to have more business because they would like to spread the risk, which is completely understandable. So we are going to grow in products in the automotive space. There's a big growth target that we have in the automotive as well, and create new avenues of growth in this 5-year period that can again, compound later on in the next 5-year plan that we come to.
Okay, so Laksh, just coming back to the core wiring harness business, 25% of your group's revenue comes from this wiring harness business. If you map the last 5 years, this business has seen a compounded growth rate of 19%. I think it was $1.2 billion in FY15. It's almost $3 billion in FY20 because of increasing content per car, your acquisition of PKC. But over the next 5 years, this core wiring harness business, what kind of compounded growth are we looking at?
I think it will depend on the acquisition opportunities that we really get. If you look at the history, I think that's a good indicator. So that compound growth will continue to increase as feature content grows. If you look at any of the trends that are playing out, more features, more electronics, wire harness will constantly increase.
My favorite, electric vehicles.
So electric vehicles will again have a more positive impact because that's more content rich and feature rich as we see it. So we definitely see wire harness constantly growing. Plus, we hope to do a couple of acquisitions in that space too. So hopefully that will do even better than what we have achieved in the past.
Mr. Vivek Sehgal, you have always had a penchant for growing also through inorganic. Anything on the radar now? Any area where you're looking for candidates?
Absolutely, but I can't tell you.
No, I was only asking for the segment, not the list of companies.
No, well, okay.
Would it be automotive?
Sure, we are a not yet company, so we will never hesitate. If the customer asks us to get into something, we ain't going to stop. We're going to go for it.
Sure. I think all our acquisitions have been at the customer's behest. So they're actually guiding us, they're telling us. Okay. And I think one of the biggest successes for us has been, in the last 5-year period, we set up 41 new greenfield and brownfield plants. People were only concerned about 2 of those that had some issues for us to grow, but they don't talk about the 39 successes that we had. And I think the customers are extremely excited by that, seeing the capability of us to launch large-scale projects in countries where we did not have a presence before, and seeing that even through tough times, we have still maintained their lines, come out of the issue, and are able to give them growth solutions in wherever they are growing. So I think for this next 5-year period, they're going to pick us for more exciting, challenging projects and give us opportunity to grow even further.
So these acquisitions, Laksh, that you're planning to do, say over the next 1 to 2 years, how much of it will be funded through debt? How much through internal accruals and how much through equity raising? Because you have brought down your debt to almost 7,500 crores. But what is the comfortable debt level given that these acquisitions are planned?
Well, from Papa and my side, I think the threshold to net debt to EBITDA is somewhere around that 2.5 mark. We do not want to cross that. And it really will depend on the opportunity. As I said before, all the plants are doing well now. All the greenfields have stabilized. We're at the end of our capex cycle. You can see our capex is declining. As you rightly said, the debt is also declining. So we have plenty of headroom. It will depend on the opportunity. Of course, we will look to raise debt on that opportunity when it comes. If it is a large size and we have to dilute a little bit, which would be our last resort, but we will do so. To go up to 36 billion, we have to be flexible in different modes of raising capital. But like I said, if we see very healthy cash flow generations in the next couple of years, that should give us a lot of headroom to really go out there and do some large acquisitions.
Okay, Laksh, for a
And also,
moment,
I think
for a
the
moment.
acquisitions
yeah.
that you're looking at are going to be a bit cheaper, isn't it? Because of the kind of conditions in the world at the moment. So
Maybe we get paid for one like we did. So
2008-9.
Can we take that for granted? You are going to get paid for the next acquisition?
Why not? आपके मुंह में घी शक्कर.
No, आप ही ने कहा था. So I'm asking you if something is already.
We're saying probably, but you're saying, can we take it for granted? So I said, आपके मुंह में घी शक्कर.
Okay. Well, Laksh, for a moment, if we come down from the 5-year target to the next 5 months, your Q2 revenues were still lower year on year, EBITDA was lower year on year. Will Q3 be different? You've already gone through one half of Q3. Does it look like now growth in year-on-year terms also will kick in?
I think year-on-year for this year specifically is not really a good benchmark. As you know, Q1 was a complete washout. In the automotive space, it's not a start-stop. In Q2 is where we really started to get back online. You can understand it's a complex supply chain. Thousands of suppliers that are supplying to one line. Even if one is having an issue, it can bring lines to a stop.
1 minute, Laksh. And I completely understand that is a problem, and in India it was much more severe than any other country. But I'm only trying to gauge your move from normalcy. Are you like 10% away from normal? Are you 5% away from normal? Would you do 95% of last year, 85% of last year?
I was just coming to that, Latha. But I think if you look at all our plants, we're at about 85% of pre-COVID levels. And even though there is a second lockdown in Europe, we have not seen any of the factories shut down. Okay. I think the governments are very particular about that, making sure that the factories, the businesses are running as much as possible, which has helped us, of course, a lot to maintain that catch-up that we were doing through Q2. So from our side, we think that definitely Q3, touch wood, if everything remains as it is, should be strong, and Q4 now with the vaccines coming out and the spread going to happen somewhere around that Q4 as well, we feel that things should only look better from here. And of course the trends of people preferring personal mobility over shared mobility at the meantime, all is giving us a tailwind towards better numbers.
Okay. Thank you very much, Mr. Sehgal and Laksh, for joining us. Well, by the way, Laksh, what will be the new name? Will it be Father-Son or will it be Motherson Square?
We joked about that in our investor conference, but
no, it's definitely going to remain Motherson.
It's too lucky for us.
Mother's baby.
Okay, good. Thank you very much, both the Sehgals, for joining us.
Thank you for having us. Thank you.
Okay, we have to take a break, but we're going to come back with this cloud that hangs over us, the chances of COVID cases increasing. Maharashtra has already taken steps of asking all travelers alighting by a train or rail or car to produce an RT-PCR certificate. What other steps is Mumbai and Maharashtra taking? Shashank Joshi, member of the COVID-19 task force in Maharashtra, is joining in to tell us